Hi, hello. This is tutor from Uplatz training. Today we will be discussing about the SAP S for HANA concepts, finance concepts. So in the last session we have done with the document splitting procedure. Now we will be doing the configurations related to open item clearing. So the first aspect which we are going to learn in open item clearing is all about here posting keys for clearing. So here we would be learning what are the posting keys for the clearing purpose. So when you do clearing, the posting invoice clearings. So what are the posting keys involved when you go for the clearing? So if you remember, for the GL postings, general ledger postings, we go with 40 and 50, right? So here also it is the same thing. Now, so the concept of posting keys. So the SAP has given a standard posting key. SAP standard posting keys for the general ledgers is debit 40. So these are the posting keys, standard posting keys which we know it, and credit is 50. Like that, when you talk about SAP standard posting keys for the vendor invoice. So for the, let's say, vendor invoice. So if you remember, we know that, and we will be learning in depth for this vendor and all in our vendor transactions. Nothing but the vendor process, procurement process. We will be learning about in depth about this posting keys. As if now the SAP standard says the posting keys for the vendor's invoice is your debit 31 and credit 40. Likewise, when we talk about SAP standard for your customer invoice, it is again it is debit 01 and credit 50. Likewise, the standard posting keys for your asset postings. So the standard for asset posting says that debit is 31 and credit is 70. So this is for your asset postings. When you're doing the asset clearance, or you can say asset disposal. So when asset disposal, again the posting case changes over here. So it says debit 01, credit 75. So these are the standard posting keys available in SAP, where you're going to maintain the clearance posting keys as well as your ledger postings. Now the same thing we will be configuring in the application. So define posting keys for clearing. So path is same till Open item clearing, that is SPRO, SAP reference IMG. Financial accounting, general ledger accounting, business transactions, open item clearing, then open item processing, then we have clearing differences. Define posting keys for clearing, click on IMG activity. So if you see here, we defined already SAP has the standard posting keys over here. Define posting keys for clearing. Now if you see, these are the clearing transactions and these are the technical. For outgoing payments, this is the clearing transaction. If you double click on the clearing transactions, we do have the details relating to your vendors, relating to your customers, as well relating to your assets. Now for you see, customers, the clearing entry debit, it would be 05. Like that, credit is payment clearing. And when you, what we have learned in the notepad or wordpad is all about your postings, nothing but the invoice postings. Now GLs 40 debit, credit 50. So we can create our own also, but we go with the standards available. Go back. Now define accounts for exchange rate differences. So this is the configuration which is required when we maintain the exchange rates. So whenever the exchange rate takes place, foreign currency valuations, then this exchange rate currencies information have to be given here. So for this, the one particular account has to be created for your exchange rates. So as we have not completed the total company code global parameters, so we may not be able to create it, but we would assign the number over here. Then later on, when we start creating in the user menu access, then we would be maintaining. So this particular account creation can also be done through Fiori app. So basically we will be seeing how to go with this, create the accounts with Fiori also. So define accounts for exchange differences, path is same. Then here it is dependent on your chart of accounts. So give your operative chart of accounts. Then click on new entries. So here you have to specify the GL account. So as if now I'm not specifying GL account, but it is mandatory entry. So what we will do is exchange rate differences. So let's create an exchange rate account. So payable account. So payable is all our ranges is one, and currency. So what is the currency? So it is our exchange rate currency what we have to update here. So as if now I'll go the exchange rate currency as USD. Then currency type always it should be 10. 10 indicates your open company code currency. So that is what we have given here. Then here we are going to integrate the loss and gain accounts. So if it is exchange rate loss, then loss account have to be created. So we would be creating loss account with this number in the front end. And if it is gain, it's an income. So we will be creating with this income. Enter. So it is giving us warning messages as we have not created. Save that data. Save it in the request. Enter. Go back. Go back. Next, define the clearing rules. So here you are going to define the clearing rules. So what are the clearing rules of your for your organization postings? What are the clearing rules? So you are going to mention the clearing rules. Path is same till open item clearing. Then we have defined clearing rules. So basically this is the cross-line part, table data. So we are not authorized to change the table. We will have just a display access over here. So select the FI clearing rule and double clicking rule fields. So it would update with your rule name. So I'm not going to make any changes because it affects total client. Next, assign clearing rules to your account type. So whatever standard account types, standard clearing rules are there. So same rules we will be assigning to your account types. Click on ING activity. So you can assign new entries and assign the account type. So let's say account type K for vendors. So let us go for S. S is given for GL accounts. And what is the clearing rule you're going to maintain? Enter, save. So I'm leaving blank because if we mention one rule here, then the other user may not be able to process with the other postings. So that is why I'm maintaining it as blank. Go back. Now, clearing differences. Now let's configure define tolerance groups for your GL accounts. So what is a tolerance group? So here the tolerance group, we can see what is the meaning of tolerance group. Nothing but your beyond limit, your limit for postings. So for account clearing purpose, this is mainly for your clearing information. For the account clearing purpose, what is the tolerance limit we are going to define for your GL accounts? The limits within which differences are accepted. So with if you specify here, whatever differences postings are being done, it will be accepted within that limits and automatically posted to predefined accounts. So in this way, what happens is it will accept as well, it will post automatically to the predefined accounts. And the groups defined here can be assigned in a general ledger account master record. So whatever you're maintaining here, that particular group will be assigned to your master records whenever you create a general master records. So there it will ask you tolerance group code. We'll assign it. So first we define here. Click on new entries. So here I'm not maintaining any group code. First I'm giving the company code assigned with company code itself. So here we shouldn't assign any group code over here because again this is your client end. So once you assign as a client, the other users may not be once you assign here the tolerance group, the other users may not be able to access the this particular configuration. So basically we don't do this. So what is a debit postings and percentage? So let's say I'm going with 10%. Either of the things can be chosen. Both we cannot give. So I'm just going with the percentage as 10. Save the data. Enter. Go back. Go back. Now define tolerance groups for employees. So here it specifies what is a tolerance group for employee. Nothing but here we specify the amount limits. So for basically here the tolerance group for employees doesn't mean it is a configuration related to your employees. So we can see here we can define amount limits for our employees, and we can use these limits to determine whether the maximum amount for which an employee is permitted to post an account or to post a document. So what is the maximum amount for which you can post this particular document, and what is the maximum line item? So here not only specifies the amount but also related to your line item. So the maximum line item amount an employee is permitted to enter in a customer, vendor or ledger. So it is universally accepted for your vendors, customers as well as for ledgers. So this maximum line item limit and percentage amount an employee can enter in a line item. So we can even go for the discounts availability. So here we specify the maximum amount acceptable. So this will be given to us in the BVP by the business. So based on that, you're going to configure the maximum limit for your GL accounts, for your vendors as well as for the customers. So define tolerance limits for the GL accounts. Groups for employees, what we say here. New entries. Now here company code. So it is basically on the company code itself. Give your company code. Now amount per document. So what is the amount per document? Nothing but the line item. So what is the amount per document you're going to post for the this particular company code specific postings. So as we don't have any amount limit over here, I will give the maximum amount limit so that we can post with n amount here. But in real life, it would be the maximum amount acceptable that will be given in the BVP. So based on that, here we are going to give the. And for open account item is nothing but your line item. So for posting the line items also, for your open item here is outstanding amount. So we will be learning what exactly is open item and cleared item. So for your open item, nothing but the outstanding amount, what is the limit you're going to specify here. And the cash discount. So as of now, I'm going with the 5% as a cash discount. Enter, save. Enter again. Go back. Now, assign users to tolerance group. Actually, this is not advisable. Here, assigning users, as I said, if you assign one tolerance group, and this is at the client end, it's not company code specific, it is client specific. So as we assign only one user to a tolerance group, then the other users may not be able to access through this particular sandbox. So we're not going to assign that. Now create account for clearing differences. So what is a account for your clearing differences? So the next configuration is create account for clearing differences. So if there are any clearing differences, because we have given some acceptable limit, right? So if there is any difference between the limit accepted or limit assigned and the posting amount, that the particular difference will be posted to this particular clearing difference account. So create account for clearing differences. As we have not configured the chart of accounts data and the account creation data, here we would maintain the account number, but then we create it again and assign it over here. So we'll go with define create account for clearing differences. So give the chart of accounts, enter. Now, click on account. So you can see here the transactions is about here differences based on arising on GL account clearing. So this is basically on your GL account clearing. Click on accounts, check the box, save the data. Now here it would ask you the clearing account number. So as we have not corrected, clear it. So we will create an account for clearing differences, and we would maintain it is 6. So we would create in the front end with this number the clearing account, and automatically it would be integrated here. Enter, save. Go back. Now, bank account interest calculation posting. So here you are going to maintain the interest calculation posting. So when there is a difference between your interest and the principal amount when you configure banking, so here we mentioned that what is the bank account interest calculation postings. So interest calculation global settings. So first configuration related to your interest calculation is interest calculation global settings. Define interest calculation types. So here, what are the interest calculation types? So is that a standard interest? Is that the balance item interest? So we are going to specify here. So we would see what are the different available interest calculation types. So we have the master record of an account. You create interest indicators and specify that they are to be used for account balance interest calculation. So whenever we configure the interest indicators, for example, we have a concept called dunning. We have a concept called payment terms. So once you configure the interest calculation type here, same interest calculation type will be taken for interest calculation in that particular submodules. So that is why it says master record. So it can be a vendor master record, customer master record, or general ledger master record of an account. It must contain an interest indicator so that it is taken into consideration during the interest calculation. So here what we do is we create interest calculators or interest indicators, and we make sure that that particular interest indicator is entered in the master record of that particular account. So first we would create the interest calculator here. So I'm selecting the standard item interest calculation. Click on copy as. Remove the code and give your own code. So I have given 88 as a code, and the description is 8 standard item. And here interest calculation type. So we have different interest calculation types, like P for item interest calculation, S for balance interest calculation, and Z for penalty interest calculation. What is your item interest calculation? Usually we go with the item interest. Item interest is nothing but how much ever is the line item balance. So based on the line item itself, the interest will be calculated. Interest item that we say. Then balance interest calculation is nothing but apart from every month where the principal amount minus interest amount. So whatever principal you pay based on the balance amount, nothing but it is like dimensioning method. So based on the balance amount, the interest will be calculated. So that is termed as balance interest calculation. Likewise, we also go with the compound interest as well as the penalty. So apart from your line item calculation interest, apart from your balance, interest also will be levied on the penalty amount also. So that is called penalty. So usually it is very rare case where you use penalty interest calculation. We mostly depend on, or we mostly follow item interest calculation. Enter. So we'll go for P, save the data. Enter, save. So this particular interest calculation we will assign when we create the GL master record or vendor or customer. Then prepare account balance interest calculation. So what is your account balance interest calculation? So if you see double one, just double click on 01 interest calculation. So it says that it goes with the calendar year, and the calendar year is termed as G. So whereas G is nothing but it starts with it would take maximum 31 days, 365 days per a year, 31 days per month. Whereas if there are any 28 days like February 28, then 29, 30, 31. So considering the last 4 days of the month, generally whichever would be the last date of the month, based on that date, interest will be calculated. That is why we go with the standard code called G. Save the data. Enter. Go back. Next. Interest calculation. So what is the interest calculation? Reference interest rates. So you're going to define what is a reference interest. So based on the reference interest, we define our reference interest rates by entering a key and a mnemonic name, so that that particular field is considered to be a reference interest, and all other fields will be purely informative. So for this, first we would create a reference interest, and there should be at least one reference interest. And in that reference interest, we are going to mention the interest rates. So define reference interest rates, SPRO, ING, financial accounting, general ledger accounting, business transactions, bank account interest calculation, then we have defined reference interest calculation. So we have standard references over here. So we would create our own reference, new entries. Or else we'll copy and change. New entries. So we would say INR, or else let's go with the INFO, INR 88. So let's say this is our field code defined. So let's say interest, or else reference interest calculation INR for company code. So description, again you can say date from. So from when date is this interest calculation should validate. So we would say this is the start date, and the currency to be validated INR. Enter. Save. Enter again. Go back. Okay, we would see that interest rate also is mentioned. So let's say the interest rate is 12%. Enter, save, go back. Then define time dependent terms. So here you're going to configure the time dependent terms. So what is your time dependent data for this particular postings? So click on new entries. So we give the time dependent. So what is the currency? Interest indicator. Let's create an interest indicator. So currency, INR. Date, effective date. So from when the effective date should start. So let's go with the standard date. So sequential number 1. So what is the term you're giving here? So we have different terms. So whether it is credit interest, arrears interest calculation, or debit interest. So both you have credit interest on arrears as well as on balance. As well, if there is a debit interest, then it should be on arrears as well as balance. So let us go with debit interest because always it is a debit interest. So reference interest rates, as we have given reference interest rate as 12%. Hit F4 and select your reference interest. So we have given as rate 12%. So amount from. So as we have given premium amount, no need of giving amount from. Enter, save. Enter again. Go back. Now enter interest value. So what are the interest values to be configured? Here we would create interest and enter interest values. So select your reference interest, click on position, give your reference interest rate. So we have given with INF4. Okay. Click on new entries. Hit F4 and select your reference interest. Valid from and the interest rate. So here, as we said 12%, so we will go with 24. So per annum it is 24%. So we give 24. It would take like this 24, enter. Because there we have given it is at the monthly interest. But when cumulative things, when you're maintaining it, you have to give per annum basis. So it is per annum. Go back. Enter. Go back. Sorry. Now interest postings. So how do you post this interest? So basically we come across with this interest when we go for the banking transaction, the dunning procedures, and the line item clearances. So here you have to prepare GL account for your GL interest calculations. So the standard codes are already available here. So if you see for the company code and for the business area and for the interest area, interest indicator, uh, the fields are masked up. What is the meaning of masking here is, as you mask it with plus, that means any company code or any amount of interest indicator calculations can be assigned here. So if you update with only one company code information, then that this interest indicator, whatever we have created, we can have access only to one particular company code. But if the same thing, if you mask it, then the masking shows that it is unlimited access, nothing but it will go with the unlimited data. Next is adjustment posting reversal. So we know that in SAP ECC also that if you do any incorrect postings, the only option is to, like, we don't have a option to delete the entry, but yes, we have an option to edit it, cancel it, and that cancel can be done through reversals. So here we can reverse the incorrect entries which we have posted. So, but here you're going to maintain what are the negative postings permitted. So if there are any negative postings, if you want to permit that particular negative postings, then here you're going to click it as check the box for your company code. So as if now we are not going to permit any negative postings. So let's see what exactly is this. So comprised of negative postings for each company code. So here negative postings is nothing but posting that decreases the transaction figures in the account posted to. So when you do this, it automatically decreases in that particular account. For example, there is a cash discount received. So when you do purchases, the heavy bulk purchases, then let's say we have availed a 5% discount. So as you post invoices, automatically 5% discount amount will be reduced from your vendor account posting or raw material account. So negative postings are used to reduce the transaction figures in general ledger, customer, as well as your vendor account. So this way the transaction figures which follow reversals receive the status they would have had without posting the reverse document and its reversal document. This type of reversal, basically it is called negative postings reversal. So whenever you want in that type of configuration, then you can permit here negative postings for your company code, so that automatically that particular amount will be reduced and posted to that particular account. Now let us specify reasons for reversal. New entries. Enter save. Saving the request. Go back. So this is your cash business transaction clearing or business transaction configurations. Coming to your manual accruals. So whenever there is an accrual, so the term accrual means where you are going to maintain as advances. So accrual is nothing but income received in advance or income accrued in advance. So it is like your commission income. Okay, so it is income accrued, where we can call it as, where basically it can be on the day basis or the receipt basis. So first you're going to assign company codes for your accrual accounts. So for the standard company code, we would assign, let's say, company code. So what is the test status? So here you have productive or test. So as if we are in the non-productive system, so we will go with test status. Save the data. Enter. Go back. Now what are the accounting principles followed? So for this, what are the accounting principles we are following? So as we have already created the accounting principles for your different segment reporting, same accounting principles can also be forwarded or can also be applied here. So define account principle. Path is same till. Define accounting principle. Path is same till accrual accounts. path is same till manual accruals, then basic settings, then we have accounting principles, define accounting principles. New entries. So we can say IND 8 and let's say accounting principles, or else Indian accounting principles. We can also mention it as GAAP, Indian GAAP. Generally accounting, or else we'll just maintain it as generally accepted accounting principles, and we can maintain it as int GAAP. Enter, save. Now whatever accounting principles you created, let us assign it to the company code. So let us assign company principal to company code, assign accounting principle to company code. So here we have different accounting principles, new entries. So your company code, then the accounting principle here, hit F4 and select the accounting principles. So we have created with a code, so that we are going to assign it. Okay. So for this, the possible combinations have to be done first. Then we are going to maintain the accounting principles. So that would be done your post migration. So once you totally migrate from ECC to your S4 Finance on-premise version or the cloud, then the company code migration will be done. So there we will be assigning our accounting principles to the company code after particular migration completes. Now define accrual types. What are your accrual types? How are you going to maintain the interest accrued? Is that based on your cost accrual or a revenue accrual? So here standard accrual type is anyways given. So here we will maintain what is the accrual. So basically we will go for revenue based accrual. So select the revenue accrual. So that is accrual type. We can go for, click on copy as, and here we can maintain the revenue as, enter. So I'm giving IND as an accrual, and here I'm give the description as revenue accrual for your company code. Enter, save. Enter again. Then go back. Open fiscal year for accrual posting. So if you want to maintain this accrual posting, so we understood that what is accrual? Accrual is nothing but income received in advance, income accrued in advance. So when we wanted to post this accrual, it has to be done based on your company code as well. The fiscal year it should be applied. So that is why new entries. Give your completed fiscal year. So let's say this is your completed fiscal year. Enter, save. So then it will go with the current fiscal year, so that whenever you wanted to enter the details belonging to your completed fiscal year, we can enter it here. It will allow us. So technical settings, that would be done by your technical consultant. So you should write a functional spec to the technical consultant stating for the authorizations for this accruals. Then that particular authorization will be released. So this is about the business transactions. Now let us go with the company code parameters. So let's see global parameters in the company code. So enter global parameters. Click on IMG activity, position, give your company code, enter, double click on the company code. Yeah, so we can see the configuration is done, as well as cost of sales accounting is also activated, and you can also see the percentage, maximum exchange rate percentage what we have configured. Now save the data. So for example, here if you want to maintain any additional data for your company code, so here we can maintain. Click on additional data. So for your tax entry, when you're doing Miro processing, so Miro is all about your procurement. So goods receipt. So when there are goods receipt, the parameters have to be updated here in tax entry. TDS number, it is nothing but tax deducted at source number given to you by your company finance team, where we have to maintain the tax authorities. PAN number, that is permanent account number, which is given to every individual and every company, every corporates by the income tax department. GIR number and tax rate for currency, for country currency. What is the tax rate if you're going for country currency? Nothing but country exchange, country currencies. So maximum it would be 18. But whatever plans which are abroad, which are not required as if now, that details you can maintain, and this is the configuration done with the logistics side. Tax without rounding tolerances, without rounding offs. So this we will be doing the later whenever we require in that particular module. Save the data. So in the next class, we will be seeing how to configure the ledgers through your LSMW, through SAP Fiori, and in the finance app itself. Thank you.